There's no exception when a country's against the wall in debt, it will debase the currency. And that explains why physical gold's at all-time highs. And that explains why the BIS has made gold a tier one asset as of last year. That explains why the oil trade is slowly moving away from the petrodollar and being net settled in gold. That explains why 30 countries are repatriating their gold off the COMEX and London exchanges to have gold at home and to repatriate their gold. That explains why 45 BRICS nations are trading outside of the US dollar and the number is increasing. That explains why the Gulf oil states are talking more and more to China about selling energy outside of the US dollar. It explains why Eastern central banks have been buying gold net and selling US treasuries net since 2014. And I think the East and the BRICS countries, despite many of their flaws, and certainly China and Russia have concerns, they're playing the chess game. They're seeing the direction of the hockey puck and the ball, and they're moving in that direction. And the West is stubbornly trying to defend an old system that is breaking down.
As global economic dynamics continue to evolve, gold is increasingly taking center stage in discussions about the future of international finance. MatthewPiepenburg, a respected financial analyst specializing in global economics and monetary policy, offers insights into this trend and its potential implications for the world economic order. Piepenburg notes that gold prices have hit all-time highs due to concerns about the stability of fiat currencies. Many countries, especially BRICS nations, seek alternatives to the US dollar-dominated trading system. The BRICS bloc, which has expanded to include 9 members, is reportedly leveraging gold to power its developing payment system. This move represents a significant challenge to the US dollar's long-standing supremacy in global trade. Over the past several years, BRICS nations have steadily increased their gold holdings, seemingly preparing for a pivot away from the greenback. Recent data underscores this shift, revealing that US dollar-denominated foreign exchange reserves held by central banks fell to 58.2% in 2024, the lowest level recorded since 1995. This decline coincides with BRICS and other developing countries diversifying their central bank reserves by adding gold and other local currencies. Piepenburg argues that Eastern countries, particularly those within the BRICS alliance, adapt more swiftly to these changes than their Western counterparts. While he doesn't foresee the immediate end of the US dollar as the world's reserve currency, Piepenburg suggests it will undergo a repricing rather than outright replacement. The expanded BRICS Plus alliance now represents a formidable economic bloc, accounting for 40% of global crude oil production and exports, 1/4 of the world's GDP, and nearly half the global population. Their growing strength in trade, purchasing power parity, and GDP positions them as a potentially transformative force in the international economic landscape. Make sure to tune in for our expert analysis. Don't miss out on future content. Hit the subscribe button and turn on notifications to stay in the loop. Your support is greatly appreciated.
Janet Yellen could say we're going to cut deficit spending. Great. But how? How are we going to, who's going to buy our US treasuries, by the way, before we even get into fiscal spending and a twin deficit with budget and trade? These things are not curable in 4 minutes or 4 years. But even before you even get to the fantasy of cutting deficit spending, who's going to buy Uncle Sam's IOUs? The world is net dumping US treasuries and net stacking physical gold for a reason. China and Japan, traditional big buyers of US treasuries, are net seller or selling US treasuries right now. Why? For a number of reasons, all of which we could spend 45 minutes on. But that's just the simple math. There's less and less love for an IOU from an issuer, the Uncle Sam, who's totally discredited after weaponizing the US Treasury and the world reserve currency, totally discredited for the weaponization policies, and totally discredited because he's issuing an IOU, which is a declining asset from a bankrupt issuer. Even the US, despite its world reserve currency status, is known throughout the world as getting weaker and less strong. So less buyers of US Treasuries means we're going to have to create synthetic liquidity to pay for or monetize our own debts. That's just on the US Treasury side. If you get to Yellen or any politician who says they're going to cut spending, you're going to have at least 40 to 50% spending cuts and entitlements, which is Medicaid, Social Security, etc., or you're going to have to cut the military budget by 40 to 50%. I don't see that happening. I don't. We could speculate on whether that's going to happen. It's very hard to get elected if you say you're going to do that. You could try and do that. I don't think the population wants to accept that type of austerity because they don't trust who's ever going to be elected next, because 50% of the country is not going to trust who's ever elected next anyway. It's a desperate time. And I think desperate times are throughout history, and without exception, desperate times require desperate measures. And the most obvious measure, again, is debasing the currency to inflate your way out of debt. And the other classic measure is to distract your country in unnecessary wars to blame the inflation or scapegoat the inflation on those wars. And I hope that's not the option. I hope it's just currency debasement. But I think, there's no exception when a country's against it's against the wall in debt. It will debase the currency, and that explains why physical gold's at all-time highs, and that explains why the BIS has made gold a tier 1 asset as of last year. That explains why the oil trade is slowly moving away from the petrodollar and being net settled in gold. That explains why 30 countries are repatriating their gold off the COMEX and London exchanges to have gold at home and to repatriate their gold. That explains why 45 BRICS nations are trading outside of the US dollar and the number is increasing. That explains why the Gulf oil states are talking more and more to China about selling energy outside of the US dollar. All these things, it explains why Eastern central banks have been buying gold net and selling US treasuries net since 2014. They're playing the direction of the ball, or the hockey puck, or as I say, the polo ball. You can be going 35 miles down the field. When you see a backswing, you turn your horse and you prepare. Or when you see a hockey puck moving direction, you change your skates. What I see in the West is everyone standing around that polo ball or that hockey puck, and they're staring at it. Well, in the East and in the BRICS, they're moving in the direction of the ball. They're moving in the direction of history. It's hard to see that history when you're in it. It's not the end of the US dollar as world reserve currency. It's not the end of America. It's the dollar will not be replaced. It will be repriced. And the US Treasury is not trusted the way it was trusted even 4 or 5 years ago. And the petrodollar isn't what it was 2 or 3 years ago since we weaponized the US dollar. And America isn't what it used to be for so many reasons 5 or 10 years ago. So, and economically, socially, its foreign policy, its domestic policy, its debt policy, its immigration policy, it's just not the same. Whatever view you want to take, left or right, that's up to you. But we can all agree that it's not the same. It's not as trusted. It's not as strong, empirically and objectively. And so history is changing. The world is moving from west to east, not just in trade and in currencies and precious metals, but in policies.
The ongoing tensions in the Middle East have bolstered the demand for gold, which was traditionally seen as a refuge during geopolitical instability. This increased interest has effectively counterbalanced the upward pressure on the US dollar, strengthening as investors recalibrate their expectations regarding future interest rate cuts by the Federal Reserve. MatthewPiepenburg notes that central banks and policymakers closely monitor gold's performance. A significant rise in gold prices is often interpreted as an indicator of waning confidence in fiat currencies, particularly the US dollar. This sensitivity explains why discussions about gold's role in the economy are often muted in official circles, as they could be construed as an implicit acknowledgement of weaknesses in current monetary policies. The situation becomes more complex when considering the growing influence of BRICS nations in the global financial landscape. There's increasing speculation about these emerging economies potentially elevating gold's status in their central bank reserves. Such a move could have far-reaching implications for the US dollar's dominance in international finance. The prospect of de-dollarization, particularly if BRICS nations accelerate it, poses a significant challenge to the current global financial order. A shift away from dollar-denominated reserves could potentially erode the U.S. currency's long-standing position as the world's primary reserve currency. This transition might empower emerging economies to be more influential in shaping international financial systems, potentially diminishing the historical economic. Let's get back to the interview.
How much gold does America or China or Russia or India or et cetera really have? Because if gold is the new direction as a reserve asset, he who has the most gold wins. I think it's fairly agreed that the World Gold Council's tonnage requirements or tonnage estimates for China versus the U.S. are completely wrong. But regardless of that, the question, why is gold omitted from the headlines? I think it's intentionally omitted for political and financial reasons. There's a great book, 6 Days in August, about when we went off the gold standard, and Kissinger and the central banks and the president were all sitting around at the Fed or the White House. And what was the big question? Where's the gold price? Where's the gold price? Because when we decoupled from gold, our currency became a spoiled kid at a frat party. We could create as much of it as we wanted to keep governments in power and to keep people reelected like Nixon. So when we debased the dollar and insulted our trade partners with a currency that was once backed by gold since 1944 and then went off that standard, our biggest fear was, will the gold price go too high? because a rising gold price is a screaming red neon flashing indicator that your currency is losing purchasing power. So in 1971, that was a big concern, which is no coincidence why within a few years of going off the gold standard, we got onto the petrodollar system to create some, global demand for oil in US dollars that gave the dollar strength that it lost when it decoupled from gold. And again, we could spend hours on that. But yes, the reason today you don't hear gold discussed in any Fed meeting or really any congressional or Senate hearing when they're talking to Yellen or Powell, and why it's not even really discussed in a presidential debate or on the Financial Times or in the New York Times or the Wall Street Journal. It's not that there's a bunch of geniuses at the mass media or in the fourth estate with geniuses at the Treasury Department and geniuses at the Fed and the bank getting together and conspiring. But it's just a natural known fact that we don't talk about gold because it's against our national interests to see gold rise too high, too fast, because that's just saying that your dollar, your world reserve currency, has less and less meat behind its bones, less and less bite to its bark. And the world knows that, and the Fed knows that. So politically, it's embarrassing to talk about gold because it's a confession that your monetary policies are failing, that your war on inflation has failed. I mean, we just cut rates before we hit target 2% inflation. We lost the war on inflation, and we can talk about how that's not going to get any better anytime soon. We don't want to talk about it openly and admit the failure of our monetary policies, so we don't talk about gold. That's to me very deliberate. And commercial banks don't talk about gold because after the repeal of Glass-Steagall, when we made commercial banks effectively hedge funds with depositor money and leverage, gold isn't big business for the banks. They'd rather lever credit instruments. They can't lever gold the way they can other asset classes. And they don't really make money in storing gold. And they don't want to talk about gold because I do think there's a direct reason that the too big to fail banks, the Fed and the White House all understand overtly and covertly that we don't want to talk about gold. And yet gold in the last 20 years, you pick your statistical window, but gold has outperformed the treasuries. It's outperformed the stock market. It has a much better Sharpe ratio, et cetera, et cetera. Even if you were completely ignorant to the macro policies or the larger understanding of gold as a reserve asset or as a wealth preservation asset, because it's not really an investment, it's a store of value. Even if you take that all out, if you just looked at its performance, you could discuss it like you could any other asset class, but we don't, and they don't. And there's a reason. And I think it is very deliberate. And again, we could spend hours on why. It's not tinfoil-headed conspiracy theory. It's being contrarian with an informed basis. And again, informed contrarians include guys like Paul Tudor Jones or Jeremy Grantham or Ronnie Sturfula or Larry Lepard, even people in the Bitcoin camp. We all understand that gold is a true store of value. And it's not a get-rich asset. It's a stay-rich asset. And the more you understand that, the more you can get over your cynicism about people talking about precious metals just because they're talking in their book. And I get that.
As global economic shifts continue, emerging economies' increasing focus on gold, particularly BRICS nations, signals a potential challenge to the US dollar's dominance. The growing role of gold in international finance and the diversification of reserves away from the dollar may lead to significant changes in the global financial landscape. While the US dollar remains dominant, its future role may be redefined as these developments unfold. How do you think the rise of BRICS nations and their focus on gold will impact the global financial system and the US dollar's position? Share your perspective in the comment section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.